Q1 was a terrible quarter for Tesla, but Q2 might even be worse based on initial data that we're getting from Europe. In the first quarter, deliveries fell 13% and automotive revenue dropped almost 20% for the company. But it may be even worse than that in Q2 because based on initial data from April, sales were down almost 50% in Europe, and the company is losing market share at a rapid rate. Tesla's sales are falling as electric vehicle sales in Europe are surging. This is the competition that investors should have been worried about, and I think should still be worried about, especially based on the valuation of Tesla, which is trading for between 10 and 30 times more than competitors. So I'm going to dig through these terrible numbers today. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's jump straight into the numbers. This is the numbers overall from ACEA, who is reporting all these numbers. This release is just the European Union. The numbers I'm going to show in just a second include all of Europe. But this is what was so jarring to me. In the first 4 months of 2025, new battery electric car sales grew 26.4% to 558,262. You would think that that would be phenomenal for Tesla, but it hasn't been. This is the new car registrations by manufacturer. This is for the EU, includes EFTA and the UK. And the January to April, so 4 months, is on the right here. You can see the Volkswagen Group up a little bit, 4.5%. That's pretty solid. Stellantis is struggling. That's no real surprise. Renault up 7.7%. Hyundai losing a little bit. Toyota losing a little bit. BMW up a little bit, but not major moves in the number of sales until you get down here to Tesla. Tesla is down 38.8% in the first 4 months. But look at the numbers for April. Sales were down 49% to just 7,261 vehicles. That's how many vehicles were registered. So in the first 3 months of the year, the sales for Tesla averaged just over 18,000. That dropped more than 50% in April to a little over 7,000. Now, the story for Tesla was that they were upgrading their facilities in the first quarter, and that was what drove the drop in sales in the first quarter. That was what a lot of investors were telling themselves. So this was a temporary decline, just weakness that we were going to see in the first quarter, but then second quarter and throughout the rest of the year, things were going to get better. That is not what we're seeing in the numbers at all. And we're seeing this decline as a lot of countries are seeing a huge surge in electric vehicle sales. This is new car registrations by market and power source. So this left column is the battery electric. So fully electric, not plug-in hybrid. That's going to be over here on the right. That's actually growing pretty significantly like it is in the US. But in the European Union, 34% increase just in the month of April. So Tesla is down 50%. The rest of the market is up over 34%. You're even seeing growth in Iceland, Norway, and Switzerland, which is up just a little bit. Norway is always kind of that strange one because they had a huge market share in electric vehicles because of the subsidies that they had a few years ago, but still growing. And same thing in the UK. So UK was up 8.1%. Overall, all of these countries in Europe up 27.8% as Tesla is declining. So why is this a big deal for Tesla? Well, Tesla's biggest revenue source is making and selling cars. In the first quarter, this is first quarter 2025 numbers, revenue was down 20%. Now, their energy storage business growing significantly, but remember, energy storage, most of those batteries are coming from China. Those Chinese batteries are going to be hit by tariffs. Margins are going to drop significantly. And if we see changes to the subsidies that the IRA put in place a few years ago, that is going to absolutely decimate demand for the energy storage business. So this is still a company that's driven by electric vehicles. In one of its biggest markets, Europe, those sales are on the decline. The other thing to think about in the US, and I covered this last week, is that there's a lot of questions about what's going to happen with the $7,500 tax credit. The current budget bill that's gone through the House of Representatives takes away that $7,500 tax credit in 2026. It even eliminates the used car tax credit. That's worth $4,000. So both of those things are making vehicles more economical for customers, but those may be eliminated. That means that Tesla's prices are going to have to keep coming down. And you can see from this chart here that their prices have been dropping significantly since 2022. Tesla was one of the biggest beneficiaries during the pandemic when a lot of other companies canceled their chip orders and then couldn't make vehicles. So we were short supply of vehicles when demand was actually very high. What did Tesla do to respond? They raised their prices. That's why their margins went up significantly during the pandemic. It wasn't because they were a better manufacturer than anybody else or had demand that was infinite on an ongoing basis. It was just simply they could make vehicles and nobody else could. So they raised their prices. But what happened when the market got back to more of an equilibrium? Tesla was forced to lower their prices. And despite lowering prices, they have seen sales decline. That is telling you that there's not only no pricing power, but there's not a lot of demand for Tesla's vehicles today.
Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now.
And this is starting to hit their income statement. You can see their operating margin down to 2.1% in the most recent quarter. That's including the energy storage business. If you go down here a little bit further, you're going to see another couple of jarring numbers here. The automotive regulatory credits. This is this second line right here, $595 million in the most recent quarter. This is another thing that Europe has been rethinking their regulatory credits. And in the US, Congress, at least the initial bill that had passed the House of Representatives, is trying to eat away at those regulatory credits, particularly in California. Those have benefited Tesla more than any other company. And this $595 million exceeds their total net income of $409 million. It would even eat up essentially all of their cash flow from operations minus their investments in capital expenditures. So there's about $650 or so million in free cash flow there, but that would be eaten up if those regulatory credits go away. So given the trends that we've seen in Tesla's business so far in 2025 and the numbers that we're getting out of Europe, indications are that demand is coming down pretty significantly. There could be also pressure in the US. We don't have a lot of the US data yet, and even a lot of companies are starting to just report quarterly numbers instead of reporting monthly numbers. But interest rates are on the rise, and that's going to make it harder to buy vehicles, and especially vehicles that are a little bit more expensive, like a Tesla is. You take away the subsidies and you keep those high interest rates, that's going to be really tough for a lot of automakers. But I think this is going to hit Tesla more than most companies. It's very clear that their brand has taken a major hit since Elon Musk got involved in politics and in the government. That's just something that we can't overlook as investors. But we also have a lot more competition coming into the market. There's a lot more options in electric vehicles than there was in 2020 and 2021 when Tesla was growing significantly and increasing their profitability. Today, you can find a new compelling electric vehicle from a lot of different automakers, and there's a lot of different options. Do you want to have all touchscreen operations like you get with a Tesla? Of course you can get that. But what if you want some buttons like I do as an old school driver? Some of the vehicles from companies like GM and Volkswagen are going to provide some more of that practical operations. They're going to provide different sizes. Remember, not everybody wants the same vehicle. And the models that Tesla is selling today look essentially the same as they did 12 years ago, and there's really only two sizes. There is the Model S and Model X platform, and there is the Model Y and Model 3 platform. If you want to have 6 or 7 usable seats, you're going to have to go to something like a Volkswagen ID Buzz or a Rivian R1S. If you want a lower price point, there are options that you can find for that. Or if you just want to stay away from the Tesla brand and you want to go with a brand you're more familiar with, like General Motors or Ford, there are more and more electric vehicle options for consumers. That competition has always been on the horizon for Tesla, but now it's here. And we're seeing in Europe and in the US that that's impacting their demand. So as the EV business grows, Tesla actually shrinks. The big question for 2025 is going to be what happens in China. China has become Tesla's most important market. It was the one market that grew in 2024. And as we look to 2025, the competitors there like BYD are lowering their prices, are offering more and more compelling vehicles. Those aren't making their way to the US, so that's not the competitive problem. The competitive problem is going to be in China itself, where Tesla is trying to compete with local companies who have very, very compelling options. So I think this doesn't bode well for Tesla. And when you just add in their valuation, they now have a $1.1 trillion market cap. That is just extremely valuable and puts a lot of value on products that don't yet exist. It's almost June. The robo-taxi is supposed to be coming in June in Austin. I have questions about whether that's really going to be launched, if there's going to be a safety driver in the car. I think that's more than likely. And meanwhile, Waymo, just in the last 10 minutes as I'm recording, has announced 3 new cities that they're going to be operating in. They may announce more even today. And then there's the Optimus robot. I don't know how you put value on a robot that we have no idea what the demand or what the economics are going to be. But this is an extremely valuable company that has deteriorating economics eventually. That will impact the company's stock price. Don't know if it'll be this year, but I have a lot of questions about Tesla's operations because the numbers don't look very good right now. But let me know what you think about Tesla. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.